What a complete disaster, folks. Oh my gosh, the market is a mess. I'm going to explain to you exactly what's going on here, why the market is crashing. It's the worst day for many of the indexes since 2020, March of 2020. This is awful. I want to explain to you exactly what's going on, what's going to transpire here, what I'm doing about this, these sorts of things. It's bad. And, a lot of folks just haven't seen these sorts of days before after you've already gotten some devastating days. I mean, I went to bed super late last night. I was listening to conference calls till like past 3 a.m. And I thought it was going to be a pretty boring day in the market. I was looking at futures. Futures were down, but they were like barely down. So I thought I would wake up and it would kind of be a sleepy day in the market, right? And no. Just no. NASDAQ's been approaching like a 5% downward move for the NASDAQ. This is on a year-to-date basis. It's now down almost 28% on a year-to-date basis. Absolutely incredible fall. The Russell down about 4% here today. The Russell's off of about 30% off of its highs it reached in November. Year to date, it's off over 22%. The S&P 500 is down over 18% year to date so far, and that one just continues to fall as well. And then obviously the Dow's having an awful day. The Dow's down over 1,200 points today, just absolutely getting destroyed, okay? You look at the big tech, awful. I mean, Amazon's down. Amazon's the worst of big tech, okay? Now, this makes sense because what I'm going to share with you a little later on in this video, it makes sense that Amazon is the worst stock of the bunch here today, okay? But you're looking at Amazon, that's a multi-year low for Amazon here today. No one wants to own anything in this market. And I mean absolutely anything anymore at this point in time. People want out of everything, okay? Tesla, 7.5% down today. This one, I think it hit 600 something at one point in the trading day today. Netflix, down 7%. I think that one's at a new multi-year low. Nvidia, 7%. We still got to get Nvidia earnings. Nvidia is the last big impactful company to report earnings this earnings season that I can remember. And they're reporting basically this upcoming week, okay? That's it. AMD back down to 95 bucks. Apple down huge today, 6% downward move. Apple, if I recall, hit a 130 something, and we haven't seen Apple hit a 130 in quite some time. That one could easily continue to fall. Imagine if Apple just had one bad number in their next earnings report. My gosh, that baby's going down like a rock, right? Intuit down 5%. Obviously, just Meta, all these stocks just getting absolutely decimated here today. This matters. This matters in a major way, okay? So housing stocks all basically right back down to 52-week lows here today, right? Home Depot, after their good earnings, investors don't care. That stock's down 6% today. This is the thing. When you're in this vicious of a market, even if you perform, and you as a management team come in with those good earnings, right? Which everybody looked at the Home Depot earnings and they were very impressed. Like, good job, Home Depot. No one cares. Even if you come in with the great numbers, no one cares. It's just down. It's sell. It doesn't matter how well you're executing your business model, right? And I look at this list here today, and one that stands out more than any is RH. No one wants to hold any retailer now at this point in time. This stock's down over 12% here today. RH, my gosh, the fall has been rapid. This is a stock that is now approaching where it was prior to Rona. It's basically lost all those gains in a really good housing market. And when it comes to RH, I'll be honest, this is a company I'm actually personally interested in investing in. But I got to say with RH, I don't know where the bottom is for that stock. And so that's why I'm not stepping into that stock yet, even though it's at multi-year lows. I'm actually not stepping in yet because I don't know. I mean, could I see RH at $130 or $150 a share? I could, unfortunately. And so, that's one that I'm like, the fall could still be so dramatic that I'm like, I'm not even willing to step in that, especially when there's so many other stocks that are so discounted right now that I think might even have, more attractive risk rewards. When I think about an RH and I think about, the realistic possibility of a slowdown in the back half of this year in real estate and into 23, I look at a stock that I'm just like, I don't know when they could report down quarters year over year for like a year straight or 2 years straight, right? And so that's why with a stock like that, I'm like, I'm not even ready to step in that yet. Oh, look at a Rocket, RKT. Actually, I feel like Rocket, I can't buy that stock yet. Mortgages and refinances, give me a break. That business is dead. That business is dead for at least a year or two. Maybe in 3 years it comes back. And so these sorts of stocks, who wants to own those right now, right? Eventually, if RH falls to $100-something a share, especially if it falls to low hundreds, that might be the moment I start to step in the stock and say, you know what? As a long-term play, I like RH. Is RH probably going to be a $500+ stock again in the future? I think so. But could RH have some bad years ahead of itself? It could. Could the next 18 to 24 months be bad for RH? Yeah, there's a high probability, especially with how messed up supply chains are. Then if you add a housing slowdown on top of that, oh gosh, man, that's no bueno, right? You look at Cathie Wood today. Everything's just down. It was starting to bounce back and then just back down again. The only good news is not to the 30s as far as the main ARK fund. It's at least in 40 something. But I mean, shoot, at this pace, tomorrow it could be back down to the 30s. I mean, just absolute devastation, right? So if you want to know the main reason why the market's down huge, is Target. But let me tell you why this is so much bigger than just a Target story, okay? So when it comes to Target, their revenue was fine. You looked at their revenue numbers, there's nothing bad there, okay? But what happened with Target is they had a massive EPS miss, and I mean massive. Now, what essentially is going to have to happen here now is analysts are going to have to take their entire full year numbers and adjust those full year numbers now at this point, okay? They're going to have to take all their 2022 numbers and basically adjust those and bring those down massively. They're going to have to bring down next quarter's numbers, the following quarter's numbers, the overall year numbers, and they might even have to bring down now 2023 numbers because the EPS miss was so bad and it was so dramatically bad that a lot of people are like, oh gosh. Now, why this matters so much, okay? There's a lot of different reasons why this matters so much and why this single-handedly is just tanking the market through the floor. Target is respected as the most well-run retailer in the world when it comes to big box. They took that title away from Walmart a couple of years ago. There's no one that's more well-run than Target, right? And so if this company comes in and misses EPS by a mile, then people say, well, what about the businesses that aren't as well run as a Target? Because that's the creme de la creme. Target is the creme de la creme in retail. There's no one that runs their business better. And so people watched Walmart come in with that disastrous 32% climb in inventory that, the former CEO of Walmart said that was apocalyptic. That was his words. That was an apocalyptic number, he said. The former CEO of Walmart, right? So you have that come in, and then you have Target report these numbers, and people are like, dude, you can't own anything in this market. You can't trust any company in this market. When a company like Target misses EPS by a mile, when a company like Walmart has inventory climb 32%, the market is uninvestable is what they'll say. And that's why it's Wall Street is selling anything they can today at any price. Because they are like, this market's uninvestable. We can't trust anything. Because if Target comes in with that number in Walmart, these are the most well-run companies in the world. It's one thing if Shopify misses EPS by a mile. It's one thing if Netflix misses EPS by a mile. Walmart and Target, they serve one purpose. To make it the money, okay? To make it the money on the bottom line. They're not there to be revenue companies. They're there to be profit machines. And if they can't be profit machines, we've got a massive, colossal issue in the market here in 2022 on our hands, right? Where people are like, oh gosh, okay. This is why everything just sells off today. Now it's interesting, NASDAQ still sells off the worst. You think with Target coming with that disastrous number, the Dow and the S&P would be the worst, right? But it's not. And just wait, oil and gas stocks are going to start falling. I can almost guarantee that. Back half of this summer, if you think oil prices are going to stay elevated, nah, that ain't happening. Especially with more and more worries about the economy, oil prices will start coming down in the back half of this summer, and that's the next leg to fall. Now we've gotten the retailers to fall. We've gotten big tech. those babies are next. It's by the end of it, it's like you guys ever seen that meme before where it's the Grim Reaper and he's like knocking on door by door, and it's like started with like the spec stocks and meme stocks, and it was like small caps, then it was like mid caps, then it was large caps, then it was big tech, now it's even retailers like Walmart and Target. Next up, oil and gas stocks. Come open your door, okay? It's the energy prices. That will be the next stage to get hit, okay? Now, this goes way deeper than Target, and way deeper than the stock market. This goes to the economy, okay? The biggest cost to a retailer, is labor, right? Like labor, one thing is your rent as a retailer, right? And let's say if Target doesn't own their actual store, they got to pay rent for that. And that's expensive. But it's not as expensive as all those workers, right? All those people running the registers and all those people trying to fill the shelves and all those people in the back room and all the managers trying to run the store. That's where the real cost is, right? And especially when it comes to like full-time employees, right? And so if you're looking at a company like a Target, right, and their biggest cost is staff, well, guess what they have to start to do? They have to start to cut staff. Now, they could cut staff on the corporate level, like maybe they have too many positions there, right? Because they're not hitting profitability targets. And if you're not hitting profitability targets and you're a company like Target, you have to cut. You have to cut. That's the bottom line. You can't just sit there as a management team and executive team and be like, oh, we're just going to keep doing what we're doing. No, you have to start cutting. So they're going to cut staff. And if you don't cut staff, you're going to start cutting hours, because a lot of Target's employee force essentially is hourly, right? So let's imagine you're, the 20-year-old that works at Target and you get 35 hours a week right now, right? And you're full-time. Because if you usually work over 30 hours, you're considered full-time. So you get your health insurance paid for and all those sorts of things. Well, here's the deal. If the company has to cut, your hours are going to get cut from 35 down to 25 or 20, which means you are no longer a full-time employee, which means you no longer get those benefits of being a full-time employee. And if that happens for a long enough period of time, sometimes it's like 3 months, 6 months, depending on the situation, you're no longer considered full-time. You're now a part-time employee, right? And you can keep asking for all the hours all you want, but if the company doesn't have those hours, it is what it is. And as somebody that worked in that workforce for many, many years of retail and hourly, and you got to understand, when times are tough, these retailers, they want to push people to part-time. And if they do any hiring, they'll hire part-time, because you don't have to have all the essentially benefits that go along with being a full-time employee. So the cost of having somebody that's working 35 hours a week or over 30, let's call it, and less than 30, it's a huge substantial difference for that actual retailer and for the profitability of that company. So corporate starts saying, we don't want full-time employees, we want part-time. Get us people that are going to work 15 to 25 hours a week. We want those part-time people. We don't want full-time. And they start cutting costs. Now, if you're the 20-year-old, now you're making less money. And now what are you doing for health insurance? You're either going to have to be on maybe government health insurance, or you're going to have to pay for that out of pocket. Everybody's seeing how expensive health insurance is. Good luck paying that out of pocket on an hourly basis for somebody like a Target, right? And so this ends up happening. And then, on top of that, they start downsizing. That was upsizing. They start downsizing positions, okay? And so this was something I witnessed at Walgreens, essentially, back when I used to work at Walgreens. I started at Walgreens in 2009, and I started there, and I was making like $8.25 an hour, and I wanted to move up the ranks, obviously, at Walgreens. Well, at Walgreens, they started basically getting rid of like assistant managers, for instance. And what it used to be is you had a store manager, then you had 2 to 3 assistant managers at a store, and then you had some folks that kind of worked a little under them, right? And what they ended up doing over time is they got rid of the assistant manager position at almost all the stores, and they put in some new position that was way lower paid than assistant manager. And so that's what led me to leave from Walgreens to go to Quick Trip in 2010, because they didn't have that position that I was looking for, essentially. And so I got the job at Quick Trip making $40K a year, and that opportunity just wasn't there at Walgreens, right? And so this is what ends up happening. And so those people that want to try to come up and make some more money, and especially with inflation slicing and dicing people right now, those positions could very well shortly go away. And all of a sudden, you don't have anything to climb up there and like grab a new position, because that position has been eliminated. And the people that are in the other positions, especially if things get rough, they're not looking to move jobs. They're gonna cling on to that job all they can. As somebody that once again came up, working in the Great Recession, 2008, 2009, 2010, people don't leave their jobs if times are getting hard. They just don't. They don't go anywhere. They hold on to that job for everything they possibly can. And unless they get fired, they ain't leaving. Okay? And so in recent years, we've had a lot of movement in jobs where people are leaving their jobs and going to find new positions and things like that. Whew, I can tell you in a recession, that ain't happening. People cling on to that job like they're clinging on for their life because there is no other opportunity at that time. Or if there's another opportunity, it's a huge risk. And they're like, I'm not willing to take that risk. I got this job right now. It's fine. I ain't going nowhere. And I can tell you, the movement I saw when, like, for instance, I was at Walgreens back in the day, there was no movement. The store managers stayed the store managers. There was nobody retiring. There was nobody leaving to go get another job somewhere. That was non-existent. Everybody clung on to whatever they could get a hold of at that time. That's what happens in a recession, okay? Because those opportunities are starting out there. And so this is a situation that, once again, it goes way deeper than Target. It gets into the economy. And if you start talking about these companies are missing on profitability left and right, hours have to start being cut, positions have to start being cut, unemployment starts to climb. That's what ends up happening, okay? I covered this in the video late last night. I don't know if you guys watched that video. If you didn't watch that video, go watch that video right now. I go into exactly how this is all going to play out and why I think over the next 6 to 12 months, there's going to be actually a lot of jobs lost. I don't want to predict it's going to be anything like it was in the 08, 09 situation where unemployment went to 10% plus, if I recall. I don't want to predict that, but I'm telling you, over the next 6 to 12 months, there's going to be a lot of jobs to be lost, and I go through exactly in detail how I see all that playing out in that video. And it's an ugly situation. It's not good. As far as the stock market goes, it's a disaster. It's a complete disaster because no one wants to hold anything. No, if Target and Walmart are missing numbers like this, people don't trust anything. People don't trust and when I say people, I'm talking about Wall Street. Wall Street doesn't trust a number from anybody right now. They say if Walmart and Target are missing numbers like this, who's to say Apple's not going to miss, and Microsoft's not going to miss, and dot's not going to miss. And they just don't want to hold anything right now. Now, as far as me, I stick to the game plan. But this has been a year where I'm just accumulating stocks. I'm fully focused on that, and that's what I'm going to continue to be fully focused on. And however much the market pushes down is however much the market pushes down. I'm just going to stay focused on what I got to stay focused on, buying stocks, and that's about it. But I can tell you, it's not good. It's not good at all for the short term for the market. Just bottom line. With these misses, how bad it is, Wall Street doesn't want to own a thing right now. And I mean a thing. Eventually it'll end, but right now it's bad. Much love as always, guys. Hope you enjoyed this. Follow me on Instagram. It'll be maybe pinned comment down there. Say hello to me. Send me a DM and have a great day.